So you should not invest in these Canadian dividend stock of Algonquin Power and Utility Corporation now. Let's understand why, and I will also show you how you can identify on your own another potential similar stock. So the company slashed 40% dividends from USD 0.1808 per share to USD 0.1085 per share recently. So in the third quarter of 2022, company reported net earnings of USD 0.11 per share compared to the dividend payout of 0.1808 per share, meaning they paid out more in dividends compared to what they actually earned, which is not sustainable for any business. Now you may think, then why they were paying huge dividends? I will shortly explain that. So after the dividend cut, the AQN will pay 43 cents per share per annum. Now let's see if that cut is enough or not. So company provided the net earnings outlook of 0.55 to 0.61 USD per share per annum for 2023. Meaning they will pay around 43 cents per share compared to the net earnings of 55 to 61 cents per share per annum, which is roughly 70% payout ratio. So the dividend ratio is dividends paid out per share to net earnings per share. Just to clarify, I am considering net earnings for the payout ratio because company management uses these metrics. So after the dividend cut, the payout ratio for Algonquin is definitely favorable. But they need to execute what they are showing in the outlook. To me, because of their consistently negative free cash flow, Algonquin shouldn't even pay a dividend. But it doesn't work like that. This is very capital intense business and it requires huge sum of money to grow its operations. So they pay high dividends to attract the investors like us. So even if the dividend is not sustainable, they have to pay those dividends to keep the money flowing into the business. And to raise the capitals, they also sometimes issue additional shares, which means they dilute the shares as they did in the third quarter of 2022. You can see the difference between the outstanding shares from third quarter of 2022 and third quarter of 2021. So that is definitely good for us as an investor. So now to generate the free cash flow, they have to cut down their expenses and debt with the high interest rates, for which they plan to sell $1 billion of assets, which will help them to pay down their debt. So currently company has around 22% of variable interest rate debt and 78% of fixed interest rate debt. And during this high interest rate environment, this variable rate debt is a big problem for the company. So paying that down will definitely help the company to get back on track. Again, execution by the management will decide the outcome. As we know that the utility sector is considered as one of the stable and reliable businesses, then what happened to the Algonquin? So Algonquin's regulated service business is still strong and generates predictable earnings and revenue. However, its high growth focused renewable energy segment is not favoring due to the high interest rate environments. So before summarizing everything about Algonquin, in my opinion, there are plenty of good opportunities in the market compared to the Algonquin. You can check out these videos where I have covered some amazing Canadian dividend stocks with strong fundamentals, good dividend yields, which you can consider investing in this probable coming recession. So the stock is down 51% from its 52 weeks high of 20.80 Canadian dollars and is trading at 9.74 Canadian dollars. So company has slashed its dividend payout by 40% to 43 cents per share per annum with the net earnings outlook of 55 to 61 cents per share per annum for 2023. So the dividend will be well covered by its earnings. However, the execution will be the key differentiator in the stock performance. And even after everything goes right, I see the stock has a rough road ahead with the challenging economic environment. So yes, the stock is trading at cheaper valuation and lower PE and could give good returns in the future. However, if you are a conservative investor, it might be better to stand on the sideline to see how company performs in the coming couple of quarters, because the short-term outlook is definitely not very good for this stock, and that's the reason why I made this video. So check out this video for other good dividend stocks. So thank you very much for watching this video. If you like my content, please do like, share and subscribe the channel. If you have any questions, please do let me know in the comment section. And this video is just for an educational purposes, and please do not consider it as any recommendation.